just wanted to just kind of jump in and get right into this. So the topic here loosely is scaled operations, and these are three of the companies that have done that, have scaled operations and are large businesses at this point. Maybe we'll start with Zach, closest to me. Like, what were some of the biggest challenges that you guys faced in, from inception through to the point of actually scaling and becoming larger? And I know uniquely in your case, you actually started as a different kind of business and made the transition. So maybe just illuminate that for us.
So yeah, we CleanSpark had its start. We were actually focused on renewables, and long story short, visited a data center in Georgia, and we saw the opportunity. Pandemic ended up being a great opportunity for me because I was really able to get the conversion and an orange pill my board over that time. And that became our focus. So we actually came in, we've since sold the energy business completely. So we are 100% focused on mining, but we do come with an energy first approach. So we came into Georgia, which has a grid that is market based, but it lacks a lot of the other pieces that you're going to hear from these two panelists about the ancillary services and the demand response programs. They don't have any of it. What they do have is they have very abundant power. And if you can manage around that abundancy, there's incredible opportunities. So for us in that journey, it was all about scaling and testing things. So we started with our first data center and an expansion with air cooled. We then wanted to do immersion. But we wanted to test it before we jumped all in. It was more expensive and a little bit unknown. I think all of us have learned a lot in the last while, but we built the immersion site. And then of course we took an opportunity in the bear market, and we've been very busy on the M&A side, really finding the diamond in the roughs, the sites that, maybe were imperfect, but with a little bit added to them have become some of our very best sites. So, and from there, it's been all about efficiency and uptime. So it's been a journey, but we really feel like bear markets are the time to build. And we've been busy doing that with, I think the last year we grew about 200% and last 14 months. And so it's been quite the journey. It's been great.
Excellent. Yeah.
So same question, right, challenges.
Same question. Challenges, but also like what was kind of the unlock, if you can illuminate it?
Yeah, I mean, I think, listen, this industry is really nascent. And so on a spreadsheet, it looks like commodities E&P, and it's a really sexy business on a spreadsheet. And you look at it and you think, wow, those margins look fantastic. Translating that into a large scale operation, over the last couple of years, you saw sort of every type of challenge. Times moved really quickly, I guess, since the pandemic. But like when we launched, it was impossible to figure out how to book a ship to get things from Asia to the United States. Everything was overbooked. You couldn't get rigs quickly enough. Then the flip side of that happened. We had lots of bad actors in the space that, more broadly caused a lot of challenges, and rig prices plummeted. And then suddenly, debt financing blew up. And so every kind of imaginable challenge on the way to build scale really happened. I think, and these three companies are probably three of the best of the large folks in terms of their positioning, and there's some commonality. I think everyone on this panel, certainly I've looked at these guys, and has delivered the large scale things that they promised. And so, those challenges were myriad, but I think part of it is, just effectively delivering what you promised and then intelligently managing your balance sheet through a cycle. I mean, those are probably the biggest things you had to overcome.
Yeah. So Riot became a company at the end of 2017. At that point, I was just on the advisory board at the company's inception. And the company then was doing Bitcoin mining, but it was doing some other things as well. It was called Riot Blockchain, investing in an exchange, looking to launch a mining pool, looking to launch an exchange, all sorts of different kind of stuff. And that was an early time for Bitcoin companies in the public markets. And because of our timing, because of things that occurred in the past, we had a ton of challenges back then just getting the company onto a track forward. And when we finally resolved all of those issues, we narrowed in our focus on specifically Bitcoin and specifically Bitcoin mining. But in doing that and being one of the early companies, we really had to, in a way, pave the way on how mining companies do financial reporting, how mining companies operate as a SEC registered issuer, from how we're accounting these things, for how we're setting internal controls around these things, a lot of administrative things that we have had to navigate without any guidance. And that kind of leads to the other point. My other point of what has been a challenge is everything all of our companies are doing, it's new. There's not a playbook on how to do this. This industry is growing very fast. The thoughts and techniques around building infrastructure, on efficiently running operations, on managing power strategy, on doing all these things, we are all doing it for the first time and figuring out the optimal approach. And that takes that is a huge challenge. There's no playbook to follow. You are with a group of people figuring it out for the first time. But in a way, I find that really rewarding because I think through doing that, we're able to build pretty incredible teams because they didn't come together into a perfect, tight, all button on top solution. They built the solution themselves. And I finished my thought with, I think what Tyler was saying was interesting. Like, there's so many things that can happen. And one of the things that we talk about is operating a company in the space is so much of what we do is dodging knives. Like, they just come from everywhere. One morning, getting a request for information from Senator Warren. Next morning, we're doing a 30% tax on mining. The next morning, the SEC is changing how we're handling impairment for Bitcoin. It's like it's always these knives are coming from every angle all the time, and positioning your company to have the staying power with the mindset of bad things are going to happen and we're going to be prepared for it is a challenge. But I think it's part of what's being part of what it means to be a successful large scale miner, particularly in the public markets.
You're kind of passionate about this, huh, Jason? A little bit?
This is all I do every day. Yeah.
This is a former poker pro over there. I feel like he's showing his hand here. You care. I love that. It's one of the things I love about a lot of the folks in mining is how much they actually really give a shit. It's awesome. And I think that's part of the formula of success, honestly, because if you're not bringing your creativity 24/7 to this, figuring out how to dodge knives, it ain't going to happen. Okay, so in this supposedly simple commodity business, you've got some inputs, you've got energy, and you've got ASICs. These things multiply and become super complicated. I wanted to talk about one of those inputs, just ASICs. And anybody can go first here, but do you guys worry about concentration among ASICs manufacturers? Maybe lead with that. And if so, what are some ways to kind of mitigate that concern?
Maybe I'll jump in. So, I think it's a concern in a very general sense. But if you look at electronics as they've developed as an industry, there's generally, 3 winners in every segment, whether it's your TV, whether it's your refrigerator, people aren't buying them from 15. So this is different because it carries a different value. That's the first thing to look at. But what really Bitcoin and the algorithm behind it is always driving for is efficiency. That's what halving forces us to do. Every 4 years, you got to look straight in that mirror and you got to think about efficiency. And so it's really created to reward those that can get there. And so I think that what we have is we have this market that's forcing efficiency more than other markets do. And so the ones that are going to be the best at keeping up with that, which, if you look at efficiency right now, there's really one clear winner, but there's really 2 others that are keeping, a close pace. I'm really excited to see the things that come from true innovation. We're still mining out of a shoebox, if you think about it. It's a shoebox with fans. It hasn't changed shape or size in a very long time. I think that when the form factor changes, when you get U.S. companies involved, and there's some exciting things coming. But I'm a real believer that when those new companies come, they can't beat the next one in one thing or 2 things, meaning efficiency or total hash rate or price or terms. You need to really change the market. Somebody needs to show up that can beat in 2 ways at least. It needs to be, pricing and efficiency. It needs to be terms and efficiency, all of these things, because we're so used to, as big miners, you have to buy a machine and wait sometimes months for it to show up. Somebody needs to disrupt the market in the way that these machines are sold and managed and moved. I think that that's where we're going to see the real change come. And I think that as soon as we're probably all going to reach a point as a market, we're going to think, well, now there's somebody that's clearly stood up and no one can catch up. And that's when somebody's going to really disrupt the market, just like it's always been in a lot of other industries. We're just waiting to see where that disruption comes from. So your question was really, am I worried? No, because I think that, human innovation is going to find the answer.
I'll jump in. I think, this is one of the scariest things in a lot of ways about being a CEO in this space, the dodging the knives. There's really three big one very big manufacturer of rigs, and then two that are also substantial. But one of them is on NASDAQ, so you have some transparency, but they're all Chinese companies, not necessarily tons of transparency into the background of the company and the financials. And they are your key counterparty vendor exposure. I'll tell you a story. When we went public, we raised $400 million in cash when we went public. And the first week I was the CEO of I had been the CEO of the company, but as a public CEO, we had to wire $90 million to China. And so, and that's 6 months later, you hope the rigs show up. And by the way, the market, was soaring. And so here's a legal contract that, no lawyer worth their salt would say you should sign. And it's sort of take it or leave it. But you got in the business to buy the rigs from the folks that build the best rigs. And so, I kind of looked around and was like, who do I need to approve this wire? It's $90 million. And, people sort of looked at me like, it's you, boss. So, it was terrifying. And a lot of the white hairs on my head and beard came from waiting to make sure those rigs would show up, because you're dealing like quite literally with people in a Telegram chat room and you agree to send them hundreds of millions of dollars. So, am I worried? I'd say, look, now the good news is those companies have delivered. We at Cypher, we buy rigs from all three of them, Canon, Bitmain, and MicroBT. And certainly after the pandemic, I personally made an effort to go to China, brought a translator, and met with the CEOs of the companies. I think that was a big part to try to get a better understanding of it. But, listen, this is in the same way there's knives on all the other elements of the business. Having key vendors that are Chinese companies is just an exposure. You don't know what's going to come from the administration in the United States. Is it harder to buy them? Do we have a new tariff? Does it somehow apply to other places? And does that break the economics of your business? Do your machines not show up for some reason? So, always want to keep a tab on people trying to innovate the next great chip. But the truth is, those companies are really good at building ASIC chips. And the ecosystem will evolve to different form factors and things like that. But look, it's one of the big risks in this business is how do you manage those counterparties? And we think about it all the time. It is definitely a risk.
Yeah, miners are the number one thing we buy. Not to go on a tangent, but what I tell people, one of the reasons that we're interested in immersion cooling is we want to make our biggest investment have the longest and most useful lifespan possible, and that's why we think the extra cost of immersion is worth that. But I just say that to emphasize the point on how important of an input these miners are. So yeah, there is competition in the space. I think how that is spread about is less important as that competition existing, and we found ourselves, I think, in a really interesting situation in the previous bull market, because while there were these other players, Bitmain really was leading with both efficiency, pricing, and supply. So you had all these companies coming into the public markets with, in a different macro environment, raising capital, and we were all trying to buy Bitmain machines. We're all trying to buy machines, and Bitmain was the one that could produce them. Now, very encouraged to see Canon, MicroBT announcing new machines, more competitive pricing. Everyone's efficiency is getting down pretty low now. This is good for the industry. It's turning hash rate into more like a commodity and less like this rare thing that we're all fighting to take whatever terms. We'll just take it however we can get it. One thing that we're really excited about is seeing manufacturing of hash rates starting to come to the United States. Historically, a criticism of Bitcoin was how much mining was centralized in China. That was definitely true from a hash rate perspective. To me, I think an incredibly bullish milestone in Bitcoin's history is what happened in 2021. China banned mining, where 70% of hash rate was, and Bitcoin was unaffected. Like, that was always a risk. Brad Garlinghouse on CNBC talking about what a huge risk this is for Bitcoin and to go by Ripple. But look, it happened, and Bitcoin continued moving forward without issue. But the other side of that has been how much manufacturing and ownership of hash rate manufacturing has been in Asia. So with our recent order, we announced an order from MicroBT for about 33,000 machines, or 7.6 exahash, back in June, and we had additional purchase options with that agreement. We purchased these miners manufactured here in the United States. MicroBT has begun building a manufacturing capability here in Pennsylvania and other places. And we think this is really good, not only for Bitcoin mining, but for Bitcoin as a whole, because we're taking manufactured, of course, the chips are all still coming from the same part in Asia for now, but we're taking the manufacturing of the hash rate and not concentrating it so much in one location and bringing it out here where so many owners and operators of hash rate exist. So, kind of forgot what the original question was at this point, but yeah, just ranting about hash rate.
Love it. No, it's totally fine. And I want to move to the other major input, energy. And in particular, what I want to drill into is, it seems, looking from the outside and using my noob mining brain, that there seem to be two winning models in the long term here. One is basically aligning as much as you can with the power provider and essentially kind of getting behind the meter and trying to make them look as much like equity partners as possible. And the other one is essentially playing in markets like Texas with a lot of demand response and curtail and being essentially a miner slash prop trading shop. And so I just kind of wanted to drill into those two models and also find out if I missed one. Is there another winning long-term model besides those two?
Well, I'll start. I think that Bitcoin mining is the tool that let's just say all generators or most all energy grids don't even know that they need yet. There's nothing like Bitcoin mining that has the flexibility, because blocks will come every 10 minutes. All the work we do is just as useful as the last block that was found, that has the flexibility and to use power when in demand or not in demand, and to use it at the capacity that there's that level of interruptibility, of flexibility, of control. There's no other energy load out there. So, I think Bitcoin is really interesting because, well, for a lot of reasons, but it forces you to think about so many things that you never thought about before. I think many people first get involved in Bitcoin and they start thinking about money and the legacy financial system and questioning things they had never thought of before and took it for granted. And I think energy grids, energy markets, it's a similar thing as well, by extension through Bitcoin mining. You take for granted that we just have power in this room. Well, there's generation sources all over this state, that are operating sometimes, operating not sometimes. Demand is fluctuating, and a grid operator has the task of trying to match that supply and demand. So we operate in Texas in a deregulated energy market where there is ERCOT, which is tasked with the mandate of maintaining reliability of that grid, but it is a free energy market, a market where energy can be traded as well. And we think we are demonstrating the value of Bitcoin mining there by being a responsive load, not just by participating in ancillary services programs where the grid operator has the right to control our load, but responding to price signals to make capacity available. In that case, we're not just saying, hey, government or regulator, tell us exactly what to do. We are the market is telling us if there is insufficient supply or if there's a surplus of supply and power. So we're quite active in that, and that has been very effective for us over this summer to help drive a ultimate net low cost per Bitcoin.
I'll pull on one thread there, and this is a complicated topic with a million nuances, and in some ways can be better discussed over an adult beverage. Maybe we'll do that later. But one thing I'll pull on just as a long-term view of how this industry interacts with the power generation industry, and this is really the vision for our company. Is because of the unique nature of this business and what it can mean to grids as a unique user, large consumer of energy, but also at the times when others don't want to consume it. There's really an opportunity to optimize a balance of power generation and ultimately Bitcoin mining. And so, the key insight we had, for example, is that we also operate in Texas. Market prices, as probably everyone knows, vary wildly. They can go up 100x in a 5-minute block. And so if you look at a lot of the companies that do power generation, they make the lion's share of their revenue by capturing those peaks, right? Where they can make 100x revenue for doing the same work. Where this industry goes over time is optimizing the balance that the Bitcoin miner wants the power all the other times when there's not a peak. And so the two are very symbiotic commercially. I'm not even talking about the sort of public policy debate about strengthening grids and what that can mean to stabilize grids. I'm just talking purely commercially. The two sides are very symbiotic, and it's certainly our thesis that over time, there will be an upward integration of the Bitcoin mining industry, certainly the large scale folks, into the power generation industry. Today, that manifests itself via kind of clauses in contracts and PPAs and JVs and things like that. But over time, I think that only moves one direction towards greater integration.
Yeah, we actually operate differently, as I mentioned at the very beginning. So, over in Texas, they're in a deregulated market. We actually operate in a regulated market, and we're connected to the grid directly. But we chose Georgia specifically. So if you compare Texas, and this is something I think where Bitcoin mining thrives well. There's scarcity that impacts their grid from time to time, and there's abundance from time to time, and it's due to the renewables coming off and on. We actually chose a different approach to operate in a state where the abundance is about a consistent base load backed by nuclear power. And so it's the only state that's still building, and they're also the 7th largest state for solar. So they have a very large base load, and then they do have intermittent renewables as part of it. Now, in those regulated markets, there's a unique structure that's set up due to actually a bankruptcy in the 70s where utilities broke apart. And we're actually almost 15% of the 2nd largest utilities load in the state of Georgia. And those providers directly own the nuclear power plants, and they funded those with bonds years ago. And they locked in their prices. And now there's small rural towns that are sitting here to benefit. When they bought those bonds, those towns had industry. They had carpet plants, they had other things. And what is there now? Bitcoin miners have been able to fill that role. So we have chosen a system that I think pairs really, really well, which is a system of abundant power and then using it in parallel with the grid. So we respond to one side of the equation, which is the market. We don't have the demand response side where there's ancillary services because we lack the signal that would come from a scarcity signal. That when there is some scarcity, it comes solely in the form of price. So we've been able to maintain very, very low prices, which helps us with our uptime. The part of the reason we chose that, having an energy background, is either, a business can be set up, a Bitcoin mining business, to really be that connection point to help balance a grid, or it can be set up in a structure that will help a grid grow. And that's what Georgia's doing. They are trying to continually outsize and be a net exporter of power. And we're there to stand there to help fund these bonds and to do future growth. And they're going to continue to push power outside the state. So very symbiotic. There's a lot more we could go down the rabbit hole on this. I see some signals on this that are telling me to move on, but symbiotic relationships is what it is. I knew it was for you, but
it's for me. But we started a little late. So I'm going to ask one more question. But the last question I wanted to ask you guys is actually about the current or future entry of nation states. And this could be actually, mining for themselves with fully government-owned facilities and teams, or it could be sort of de facto public-private partnership in nation states. And so basically, what's the lay of the land? There's rumors of some countries doing it now. Is that real? And then what do you expect, say a decade from now? Do you think that's going to be a big part of the landscape?
So we are seeing examples of that already, right? BitDeer had its announcement with Bhutan. Marathon's doing a deal with a sovereign wealth fund in the Middle East. So we're starting to see these deals come forward. I think that's a very bullish and positive sign for Bitcoin and Bitcoin mining. I think an important reason that Bitcoin uses proof of work is that energy is an input that cannot be forged or stolen. And you can find pockets of very cheap power, let's say even state-owned power somewhere, but ultimately someone is paying for that. Energy always has to be paid for. And I think that because of that, I'm not concerned necessarily, this wasn't your question, but I'm not concerned about sovereigns getting an inordinate amount of control over Bitcoin because they have access to cheap power. Because I just do not think that happens at enough scale to be meaningful. Someone is always paying for it, right? So they're going to take that resource away from something else that is going to be costly to them. But I think that what we will see is the benefits of Bitcoin mining demonstrated, and we are going to see smart jurisdictions wanting to attract Bitcoin mining and Bitcoin companies. Obviously, we're already seeing that in El Salvador, and I think as more and more countries are getting smart about that, we're going to see more. I think it's going to be a positive thing, and I don't know if you guys know of anything else that's going on in that sphere.
I've talked to folks. There's definitely mining going on by sort of military states that have access to free power. Now, there's a cost to generate it, and they're stealing it or whatever those resources. But that definitely happens today. Some of the lower efficiency rigs go to places specifically that have access to free power. But on a kind of a longer time frame thinking, I agree it's bullish, but I also think it's inevitable. That doesn't mean next year, but to use the commodities kind of E&P analogy again, this is like drilling for oil, but in the 1880s. It's like a very fragmented market with a bunch of wildcatters and no one, it's nascent. The car hasn't been invented yet, so they haven't really figured out. We're using it to light lamps right now in the city, basically by analogy. And in the same way that today, huge nation states, drill, produce oil. I think that's the path that ultimately that could take decades to migrate up that kind of chain from smaller countries that may have more of an incentive to do it earlier. But I think if you're a bull over the long term on Bitcoin in general, I think it's probably an inevitability.
Yeah, I'm with Jason. I think it's going to be in the form of partnerships more, but they're going to learn from those partnerships and they're going to set up shop. But I'm going to use the fear-based point. I don't really fear them having these big, massive deployments. If you think about the speed at which government moves, this is an industry I feel very confident that the commercial side, I'll call it, rather than government side, is going to be able to stay ahead. It is the old rigs that are, going to some of these places. The cutting edge is going to stay, in private hands rather than government hands. I really think so. So whether it comes or not, it's going to take a very long time.